Good morning, and thanks for joining us today. Lots of exciting news have been going on, and it used to be a challenge 10 years ago to find topics to talk about. But again, every day there's a big change going on that's upending or adding a little bit of a nuance to international taxation. And in a way, we actually have some good news, I would say, that came out. There's a proposed regulation that's going to get rid of some of the foreign reporting requirements for foreign pensions. And that's an onerous compliance task that, unfortunately, for years, we've been charging clients a lot of money to file forms 3520A, 3520. And there's a ton of confusion among the tax industry about the proper treatment of it. But here it is. We now have a proposed regulation from the IRS, and I'll just get this up on my screen. I'll talk about that in a little bit. We have a proposed regulation from the IRS that looks to offer some assistance, but it's also leaving a lot of questions unanswered. And we're going to try to war game some of those answers out for you today. And I thought of no better guest today because the Australia tax treaty, Australian superannuations are always a big issue, and they're instructive for other treaties around the world. So I thought no better person than Karen Alpert to have on the show. Karen, welcome. Thank you so much for joining us today. Really appreciate it.
Glad to be here, Anthony, and to join you with Keith and John to discuss this. It sounds like an interesting topic.
And Karen, you are in Australia, so you have your finger on the pulse of actually what's going on there.
That's right, for the Australian side.
And fixthetaxfee.org is your website, which has a bunch of great content on this issue and your advocacy work in order to get this through. So that's fantastic. Thank you for that. Here's what we have is that the proposed regulations are not to require 3520A or 3520. And this doesn't matter if you have a tax treaty or not. It doesn't matter if you're in a country with a tax treaty. It's proposing to get rid of this reporting requirement, which tells us a lot about where the IRS feels about these.
I think there's a lot of restrictions to it, though.
Yeah.
Basically, the IRS is saying, well, if you have something that looks like one of our plans, then we'll exempt it. But if your country does anything different, like allowing anybody to contribute, not just employees or not just based on earned income, that's going to kick it out.
Yeah, well, you know what, and that's actually what sparked this topic with me, Karen. Last week I was at a great presentation down in Westport, Connecticut, and we went over the Secure Act 2.0, which was I would say it's a huge change to the U.S. retirement plans. And a few things popped up in there that piqued my attention. Number one, there's now an emergency savings account that you could use. You don't have to use it for your retirement. I thought that was a pretty big deal, and it kind of reminded me of the UK ISAs about the tax treatment of those. Like, well, ISAs aren't necessarily for retirement. They can be used for retirement, but it's not necessarily a retirement-based vehicle. And then some of these changes in Secure Act, I saw the same things, which led me to conclude, I'm like, well, now, you know what, as the U.S. retirement scheme changes, now the U.S. tax industry, well, are they going to look at this and say, well, look, the U.S. can change what its retirement plans are to something that it wasn't before. So why are we going around to these other countries and defining what their retirement plans are? And that's one of the, I think, a really interesting issue that I hope we can get into a little bit more today. Joining us also too is our great friend John Richardson. John has created some nice outlines, some beautiful presentation for us, and as always. So John, I really thank you for your detail to this. Welcome aboard, and along with Keith Redmond, the advocate to the consulate to an advocate for Americans overseas, American immigrants. And by the way, Keith, I think you're actually responsible for bringing me together to everybody. So I want to thank you for that, for all those years.
Yeah, no, this has been good. Today, I'm going to take a step back because you guys are the experts. So I'm going to learn from you on what's going on with this so I can help others.
All right. Fantastic. Fantastic. All right. So let's get into it. So, again, I want to take a look at some other treaties as we go along through this. But let's start off with this. John, why don't you get us going here with your slide there?
All right. So what brings us together today are these proposed regulations. Okay, which
that kind of cracked me up, just so you know.
among other things, Anthony, among other things, are these proposed regulations. I would recommend people reading this. It is a very, very interesting history of a lot of the problems. It really is very good. It tells you, it sort of reinforces that this stuff has its origins mostly in the Clinton administration in 1996. All of this is clearly 100% motivated by the unstated assumption of US law that the creation of any entity, corporation, trust, what have you, is for the purpose of somehow hiding money from the IRS. And so what we have in this part of the Internal Revenue Code is a hellishly complex set of rules that not only define what is income, specify who, when there is income, is to be attributed to, the person who set up the trust or the beneficiary, reporting requirements that I do not believe can be really understood by the average person. And I think that this stuff is, I don't know that the right word is complex, but I think it's so difficult to apply it practically to the situation of Americans abroad. And of course, by the way, they're the people who are mostly affected by this, right?
Well, you know what, and this is something that came up, John. There's actually, we're coming up for us is there's a lot of Australian pilots, and the Australian airline industry isn't all that large, and so if you're looking to make a little bit of money, make something for yourself, there is there is an agreement with the U.S. that allows any Australian pilot to come to the U.S. And work. And now the issue is, well, what do they do about their Australian superannuation fund when they, when they expect to return to retire in Australia? So I would say it also affects, quite a few Australian.
It affects people with any kind of financial footprint that's outside just one country, right?
Yep.
Whether it's Australia, the United States, or what have you. I mean, this is the basic problem. But what I find interesting, and I've read these things once, so I'm not 100% sure on what I'm about to say, but I don't think there's a single reference to the impact of this stuff on American citizens living outside the United States, which is quite interesting. The other thing, before I forget this, that I thought was fascinating is they're claiming that only 35,000 Form 3520s are filed every year. 30 is that? I mean, that is what if that is true? What that means is that the vast majority of Americans abroad who file U.S. taxes either don't have any of this stuff or don't recognize it as possibly subject to, the punitive kind of reporting, et cetera. So this is the basic context here. And what I find fascinating about it is, I mean, as you know, I've kind of a senior citizen, not only in terms of age, but in terms of the number of years I've been involved in this kind of problem. And, at the beginning when I didn't had trouble applying, and I thought maybe it was just me, but now I can see that no, I mean, these rules cannot be applied effectively. Now these reporting requirements are in section 60480 of the Internal Revenue Code. And by the way, for listeners, the filing of this stuff is different. It goes to a place in Ogden, Utah. It's almost a separate administrative scheme. And it is a very, very penalty-laden administrative scheme. And you may recall, and this is, part of the reason for this set of rules, about 5 years ago, the IRS computers, I think, issued a ton of 3528 penalties on all kinds of benign tax-favored savings accounts in other countries, including Canadian TFSAs and, things in Australia. And, so only 35,000 people are filing these, but those were the ones who were penalized for filing, basically, right? I mean, that was the point. I mean, it seems to me there's something really fundamentally unjust and crazy about a tax system that punishes compliance, which is really what it is. I mean, I have, been faced with a problem before of somebody having not filed something. The question, well, what do you tell them? You file late, you're going to get a penalty. And, to get this stuff abated is a huge problem.
Oh, it's not. Yeah, no, it is.
For somebody a few years ago, it's like 20 pages. And it was somebody in Australia, and we were 100% successful. But I mean, this was a lot of time to get this stuff abated.
Yeah, I had one where, it took 4 years to resolve an incorrect 3520A penalty because the IRS was still asserting there was a trust. And there wasn't a trust, there was an inheritance. And we're trying to explain to them, here's the difference. It's not a trust, it's actually an inheritance from a U.S. person. So and it took us 4 years to resolve it. But eventually it did. But yeah, 4 years.
You put your finger though on an extremely important point in the analysis here. In fact, the starting point is, when we look at 6048, we're talking trust, basically. Okay.
Right. Yeah. And that's what I have up on the screen right here. I got the this is from the this is what's up on the screen right now is from the proposed regulation right here.
But Anthony, the point is this, that a lot of these things, I don't believe, meet the Treasury definition of trust anyway, right? So to compound the problem, I'm to use an example I know best. In Canada, we have these tax preparers filing 3520s and 3520As for these, completely benign TFSAs that are nothing but a Canadian bank account with a tax advantage wrapper. And they shouldn't be filing. In my view, they should not be filing these things because they're not trust to begin with, right? So then, so you've got this other sort of underlay of this stuff, if you will, of whether you're dealing with trust anyway. So this is the problem. So the context of these regulations, in part, we're talking about the 6048 part of this today, and it's much broader than that. But the context is, when are people required to file these 3520s, 3520As, etc.? And what it's trying to do is provide conditions under which there should be no requirement to file a 3520 or a 3520A regardless. Now, before we dig into this, I want to give you my thought on this for what should be added to these regulations. And I intend to make a submission on this and possibly a live submission in August on this because I think this is so critical. But in my experience, and I think that you would corroborate this, and certainly Karen would, the problem is level one, understanding what the rules actually are, the reporting rules. But if you can understand those, in sort of an abstract basis, it's a problem of application of the specific facts. How does it apply to this? How does it apply to that? And as you know, there's no IRS, guidance on this sort of stuff. And what I would like to propose on this, leaving aside treaty issues and stuff like this, is that, the United States has all these FATCA IGAs with countries. And Annex 2 of every IGA includes a country-specific list of things that are not reportable under FATCA, right? And these tend to be superannuation is one of them in Australia, right? Or generally they're, tax favorite savings accounts. And my view of this is that, clarity matters, okay? It matters, all right? No tax system is legitimate unless there's clarity in terms of how it applies, right? It matters. And I think that to establish as a clear, safe harbor provision the following in regulations: any plan described in Annex 2 of any FATCA IGA is exempt from 3520 and 3520A reporting. I think that would clear out a lot of these problems. I think it would remove a lot of anxiety. And I think it's a completely reasonable thing to do. In other words, it meets the objectives of this whole problem, very, very well. Don't forget that to say that a 3520 or 3520A is not required for an Australian superannuation or a Canadian TFSA or what have you, is not to say that it's not reportable by the individual taxpayer somewhere else, for example, 8938, right? So anyway, that's the context of what's going on here. Now, just one last thing before you get your thoughts on this. I think it's important that people understand how the U.S. rules kind of fit together on this. Okay, so the starting point is, of course, the legislation. So you're going to find 6048 is obviously in the trust section, and their foreign trusts, etc. But as always, okay, the legislation, and this seems to be the main characteristic, is that Congress just establishes on a general principle and leaves it to Treasury, delegates to Treasury the problem of making up the specific rules, aka regulations, and these are the proposed regulations that that we're looking at today. But on a retail level, the expression of the statute 6048C and the regulations on the retail level, people experience this through Form 3520 and 3520A, and specifically what we're talking about today, Part 3 of 3520, right? So that's what we're looking at here, right? Is whether a 3520 is required, okay, whether it's required or not. Okay, and then I think, lesser, if so, how to fill the thing out. And finally, this is completely irrelevant, okay, to treaty issues. So for example, the Canada-US or the US-UK tax treaties, which are more modern treaties, basically have provisions that would exempt private pension plans from taxation during their growth years. They're taxable only on distribution. And 3520s are generally not required to be filed for this sort of thing, although these things are required to be disclosed on the retail level of Form 8938. So that's the context of what we're talking about today. And hopefully Karen is going to provide guidance on the narrower question of whether the proposed regulations here hit the mark with Australian superannuations or not. In other words, assuming these proposed regulations go through, what does that mean in terms of Australian superannuation? Does that get them out of the 3520, 3520A requirement generally? So, I think that's where we are.
Well, thank you, John, for that. Now, and the thing I want to get into, this is the question that I kind of was struggling with, and as I was watching the presentation on the Secure Act, I was thinking to myself, well, in every one of these situations, you're creating a trust, right? You're someone's holding your money for your benefit. And I'm thinking to myself, now the employer has a Form 5500 to file, but as far as an individual U.S. taxpayer, my dad has 4 pensions. He's been working he has a few careers. He has 4 pensions. I can't think of one 1041 trust return he has to file for any of them. And so it seems like we're okay defining domestic retirement plans. They have all the aspects of a trust that you would say find in an Australian superannuation. Really, you really do. Yet we don't have to file a 1041. Again, the employer does have that Form 5500 to file, and so that's the part that's just striking me quite oddly, that we allow trusts not to be taxed as trust in the U.S. If they're related to retirement. No one even questions it. No one even gets like, oh wait, you know what you need to do? You need to file a Form 1041. But as soon as these go overseas, now the litany of forms need to be filed. But we're still just talking about a retirement plan overseas that yes, you definitely have elements of a trust, but so too, by the way, what do they call Social Security in the US? The Social Security Trust Fund, right? That really seems like a trust, but yet we're not required to file a trust on our Social Security contributions and distributions. It's just retirement plan. And I think that might be something to look. It's just a retirement plan. Yes, it has aspects of a trust, but it's just a retirement plan. That's where I'm at.
Question for Karen. A lot of these things, though, Karen, that Anthony's describing would presumably be excludable under 402B provisions. Is that correct?
What the employer-sponsored super would be, yeah.
Okay, so I mean, it's again, it really depends. It really depends what you're looking at. But the whole, what I want to come back to again, just to reinforce this, because, okay, look, I think that all the Americans broad groups need to come together and do a joint presentation to Treasury, making it very, very clear that these rules are mostly affecting people that were never even contemplated when the rules were put together, right? Okay.
Right.
You know, I mean, this is so critical. I mean, it is as though, you know, the unspoken assumption is that somebody would go and work in Australia for a lifetime for the purpose of somehow avoiding US taxation. I mean, you know, the assumptions of this stuff
That would be kind of silly.
are so unbelievably insane, right? And more
It's not
broad,
like Australia doesn't have tax.
oh yeah,
Right.
or
Yeah.
Canada, right? Or you know, it's et cetera, et cetera. But on a broader sort of general basis, all of these things need to be seen as arguments to get rid of citizenship taxation. Because if you have all these punitive laws that are mostly affecting people who, you know, they were never intended to apply to anyway, right? Or at least were not part of the discussion, the catalyst, if you will, for why the laws were enacted, you know, then I think you've got a problem, right? And you can do one of two things. You can either get rid of the 6048 and 3520 for everybody, or, you know, you can do, I think a more rational thing is to say, you know, oh my God, I mean, you know, this was never intended to apply to Americans abroad. Let's get them out of the citizenship taxation thing. So I think these are the arguments for ending citizenship taxation. I invite people to actually read the proposed reg, the history of this.
And I'm gonna put the proposed regulation in the super chat right now if you're online, and it's also in the description below. So I'm putting it right there for you to check out.
You got to understand, okay? They explain the reasons for this, and they're very clear that the reasons are resident Americans setting up trusts outside the United States to hide income from the IRS. They're clear on it.
Right, and that's not what we're talking about here. That's not.
That's exactly right.
Well, with one exception, and I hope we have time to cover it later. The U.S. Malta Treaty is interesting. That's one that I'm not sure if we have time for that. That might have to be I don't think we're going to get to that today. That might have to be a special podcast. We don't have time to discuss that, I don't think. So let's continue with our slides here. So John, thank you for let me get your slides back up here. Why weren't we adding? Oh, that's why, because I don't have the right. Here we go. So this is what we were talking about. This is these are what the IRS is discussing. And the other thing too is a lot of this, you know, Clinton era tax changes and research. You know, one of the here, I'll just, you know what, I should put this right here. During the mid to late 1990s, abusive tax schemes, including offshore schemes involving foreign trusts, reemerged in the United States after last peaking in the 1980s. And now here the article cited is efforts to identify and combat abusive tax schemes have increased, but challenges remain. Notice the date of that, May 22nd, 2002. Well, what does this predate? Well, it actually predates the entire FBAR enforcement. There really wasn't, and people really didn't file them. There's very few FBAR enforcement. It also predates the Hire Act, which brought us FATCA and brought us mandatory third-party reporting, and also Form 8938. Because I do believe, now Karen, you could correct me if I'm wrong on this, but the Australian superannuations aren't subject to FATCA reporting. Is that correct?
They are not subject to, they're listed as exempt in Annex 2 of the IGA. So
yeah. I mean,
so the banks do not have to report them.
Right. So the banks will have to do it, but an individual on Form 8938, you have to.
Right.
So what's the point of this duplicative form at this point? And I think it's like, well, we need to put it on an 8938 and a 3528 and a 3520. And maybe we just need, maybe we could just need one, or maybe not at all,
Yeah.
right? That's
a very, very reasonable point. Okay, a very reasonable point, and that's a point they make in their discussion when they talk about various exemptions. That it's not that these things aren't disclosed; it's that we just don't require the 3520. They're going to be reported on the 8938 anyway. Okay.
Yeah.
And I think this shows you, it suggests, I think, a necessity to reevaluate, these kinds of requirements, every 5 years or something like that, so that you don't just accumulate, just gads and gads of
Well,
stuff.
let's think about it. That you might have to report your superannuation in 4 different spots: FBAR, 8938, 3520, 3528. Those are 4 different things, four different reporting forms that aren't that don't necessarily calculate your tax. They're just reporting forms.
So if super is exempt from U.S. tax, you still have to report it in all those places?
Well, yeah, you still have to report it on an 8938 and an FBAR. And again, yeah, as followers of this channel know that we have a big problem with the FBAR regulation, which created the law. We're not going to get into that now, but it is something that we just do. We just do it, even though we don't think it's actually what's required. But we just do it.
On that point, you read the whole regulation, and then we ought to do a separate podcast on this, because there's discussion of dual treaty non-resident taxpayers, aka green card holders, throughout this thing.
Mm-hmm.
And what I actually find most interesting about this notice is it continues the trend of exempting treaty non-residents from reporting requirements, right? In this case, the 3520, and they also talk about the receipt of gifts in here. I believe that's the same thing, but their rationale is this, okay? Is they say, why are we requiring reporting of information when the United States doesn't have a tax interest in this information, right? In other words, for a if they've done this, for example, with 8938, right, for treaty non-residents, they're, since, I don't know, some years ago, treaty non-residents are not required to file a Form 8938 or an 8621 PFIC thing, and they're starting to extend this. But the rationale is the United States doesn't have a tax interest in that.
Right.
Why are we reporting it? So similarly, if we have various kinds of foreign income streams that may not be reportable by U.S. citizens because of treaty or anything else, who knows? Then the same argument, I think, should apply, right? So the U.S. has got to hold this. Let's have a presumption of report early, report often, report everything, and by God, keep a record of what you report.
Keep a record.
And report as many times as you possibly can.
Right, there you go. Exactly. Yeah.
Report often.
Report often. Yeah.
That's the mantra, right?
Yeah, exactly. Well, and I think that this is tied in here. We got a great comment here. Remember the time when we each gave individual consent to be taxed at astronomical rates to pay for all the things politicians want to waste money on, and the question is, we never did, right? But somehow we're here, right? Somehow we're here. And I would just correct you that actually we're not taxed to pay for all the things politicians want to waste money on. Rather, it's just destruction of money. Federal government gets all the money it needs from the Federal Reserve. It doesn't need our tax dollars. Our tax dollars only exist to be destroyed so that hyperinflation doesn't occur. That's the only thing I'd just say on that. It's, the Federal Reserve and IRS work hand in hand. That's why they were signed into law within weeks of each other in 1913. So let's go back to our slides here, and let me get this back up here. And so let's go to I think this is now here we are. This is your outline, John. And I jumped ahead. Should I go forward more still?
You can stop there. That's 6048C.
Okay. Oh, okay. That's where we are. Okay, great.
And okay, so what that is that's just the section of the code that requires, reporting, that requires reporting, right? Distributions and all this kind of stuff. I mean, it's a bit of an oversimplification, and that, and the regs follow from that, and then you just get over to the 35. Like, the forms are just sort of the retail level expression of the statute. Right. That's what they are. Yeah, they
Well, yeah.
Question here. Do you think anybody could read this stuff and understand it?
No, and I mean, okay, back to this comment here. This is the problem I have. Even if you look at the simplest tax form, the IRS form 1040, if you read those instructions, you copy those instructions and paste them into a reading comprehension analyzer, you'll find something interesting, that they're all written, and these are the easiest ones. These are not foreign. This is not foreign. These are the easiest 1040 obligations for every American. Is that they're written somewhere, depending on your scoring mechanism, they're written somewhere between the 9th and 11th grade. Now, you might say, no, that's not so bad. Well, there's this other fact. The average reading comprehension of every adult in America is the 6th grade reading level. So more than half the people subject to the U.S. tax code can't understand it. And that's the simple part. So when you're going to foreign taxation, which is far more complicated, far more vague, where the IRS won't give, because it would be really helpful if the IRS just had a guide to say, oh, here's how this is what we consider all foreign retirement plans to be. Go country by country. It'd be really simple for them to do that, but they don't want to do that. And I think the reason why they're coming up with this proposed regulation is for themselves, because what the IRS doesn't want to do is lose. They don't want to lose. And I think there's a valid treaty position that Australian superannuations are exempt from U.S. taxation.
But isn't that a very different issue from these proposed regs? I mean, nobody's jumping in and saying that somehow this overrides a treaty or anything. I mean, this is just,
right,
how the U.S. is going to try to interpret and apply its own domestic law. No matter what this says, right? I mean, even if if Karen tells us that whatever they're proposing here would allow for the exemption of reporting 30 superannuations, that's a completely different issue from what the treaty might say on this thing. Right.
Absolutely.
Mm-hmm. All right. Well, right. You're right. And that's the other. There's your other complication. Now you have to be an expert at interpreting treaties, protocols, and technical explanations. And which is just, and that's where, and this is where I have very reasoned debates with other tax professionals about this. And I'm not going to say they're 100% wrong, because it's intentionally vague. It isn't. You're just trying to come up with and I think that's the part. The intentional vagueness is what subjugates us, because we don't know. So we have to over-report, or maybe we're paying too much, or maybe we should try something else, or maybe I should try this, because of the lack of clarity.
Well, Anthony, that's the effect of it, okay? But I think a better way to look at this is that for Americans abroad, for those who are in the U.S. tax system, I'd be interested to know what you think of this characterization. I think it's really sort of a quest for defensible compliance, right?
Yeah.
Now, in the midst of, so you're looking for an island of defensible compliance in an ocean, of a bunch of, tax compliance people who are just worried that if they make a mistake, they're going to have a problem personally. So, there's a tendency to over-report. And, my view of this, I'd be interested what Karen's view of it is, that over-reporting is not harmless. It's not harmless at all. I think it's extremely dangerous. If either you would like to, comment on that.
Yeah, I absolutely, John. And one of the areas where I find over-reporting really, really dangerous is when people will take a treaty position on Australian superannuation, and they will file a Form 8833. And the reason why, because Form 8833 is when you take a treaty position. But if you look at the regulations themselves say if you're taking a treaty position on a pension, you don't need to file the Form 8833.
That's right. Well, that's exactly right. But of course, that's, when you're dealing with, look, in fairness, this stuff's incredibly complicated. And to be a really, really, really good cross-border tax preparer requires, I think, a lot of commitment to continue.
Oh my, yeah.
Well, and I don't think you can be one for a generalist tax report preparer for all countries. You got to be a specialist in each country, because each country has its own special, structures, etc.
Yeah.
That you have to know so that you know how to deal with them on a U.S. return.
And you won't.
Treaty.
Right. And so, I mean, the thing is, right, we know what everything around the world is. And you would think the IRS would have the resources to say, hey, yeah, this is how, hey, look, here's a list of all the retirement plans overseas. And this is how, these are the forms we think are required. And these are the forms, and this is the taxation has to do. The government could do that, but they just don't, and they won't. And so they leave it up to the tax industry to figure it out. And you're right, because, hey, everyone's looking to protect themselves. Like, hey, look, I don't want you calling me, say, Anthony, I got a $10,000 penalty because you didn't file the form I said I didn't need to file. No tax preparer wants to hear that call. And so it's like, hey, we're just going to file this form just to be safe.
What that means is that, and I've been an observer of this for years and years and years. Nobody knows what the law is. Okay, so what happens is the tax preparation industry creates the law. You get a critical mass of people filing Form 3520s for Canadian TFSA, and all of a sudden, that becomes the expectation.
Yeah.
And the IRS starts to expect it, and then
well, that's exactly right. And so, I mean, this is not. I mean, I have all kinds of friends in the tax compliance industry. Obviously, this is not directed at them, but we talk about the problem of vague IRS regulations and penalties in this, but I think, in fairness, that the tax preparation industry is a huge part of the problem here.
Well, here's a great comment from Melvin here. So I asked a tax professional whether a simple foreign annuity contract with a foreign insurer would be a foreign trust. He was very vague, so I actually considered filing a Form 3520 and 3520A. Well,
Melvin, again, look, this is not advice, but I'm going to give you some stream of consciousness thinking here. If you don't know that it's a trust, the first step is whether it's a trust. Okay, it's not that it's you don't start with is it foreign. You start with is it a trust. Right. And if you can clear that hurdle, then you want to get into whether it's foreign. But if it's so difficult to reach the conclusion that you've got the factual predicate for the requirement, namely a foreign trust, I would think long and hard before, well, I don't know if it's a foreign trust, but I think I'll file 3520 anyway, because all that happens is you're creating an expectation of filing these things
every year, dude.
And do you know the penalties on this? I believe it's 35% of the.
Yeah, on the 35. Yeah. Well, luckily, Melvin. And here's the thing: how do you fill out the form? Because it's not a trust. I mean, right? He's like, well, I didn't because I couldn't fill it out. So I think you did the right thing, Melvin.
By default, how do you fill it out anyway? I mean, I remember, many years ago, a professional considered to be a trust. Okay. So here's a point that's very important to me. Most people are astonished to hear this, but the Internal Revenue Code talks about the evils of corporations and trusts and that. But what's fascinating is that they're not defined in the Internal Revenue Code at all. You have to go to Treasury regulations.
What?
I'll say it again. Okay. Corporation's not defined in the Internal Revenue Code. A trust is not defined in the Internal Revenue Code. You find this stuff, what their view of it is in regulations, right? And, mistake number one, and everybody knows this is a mistake, but let me remind everybody, the fact that it's called a trust in another country does not make it a trust for U.S. tax purposes. Okay.
Mhm.
And you can continue that reasoning, to, other types of entities, etc. So there's a whole, unless you're just, a salaried employee, it seems to me that for people who are thinking about the tax compliance question, Americans abroad, I think that the question is not, should I file U.S. taxes? I think that's a second level question down. I think the first question is, given my factual situation in life, what would it mean for me to file U.S. taxes, right? What do I actually have under the U.S. rules? Do I have a trust? Do I not, for example? Okay, and given those determinations, or likely determinations, what would a U.S. tax return and forms look like for me? And that is, I really believe, the most important first step, on the tax compliance question. Because you get all these people, and understandably so, out there in various parts of the world, and they say, well, I'm gonna, I'll send an email, a one paragraph email to some taxpayer and say, well, how much will it cost me to file this return? I mean, you don't even know what's supposed to be filed.
Yeah.
Without getting into your situation. This is part of the problem. But I guess what I'm really saying is that I think people need to be careful because, once you start presumptively filing these forms, how do you stop filing a 3520? Other than, ending your relationship with whatever it is, right?
Yeah. And that when we're talking about the overfiling and when we're filing the wrong forms, well, what you're telling the IRS is, yeah, my tax preparer doesn't know what they're doing. And you can come and run me over because we don't know what they're doing.
No,
and you're open.
That's not what you're telling them, Anthony. What you're telling them is that you have a foreign trust. That's what you're telling them. Okay. And
Just to clarify, it's the law does not define a foreign trust. Rather, just like individual, which is not defined by the law, that's defined by regulation. We really don't have a lot of federal income tax laws. We have a lot of federal income tax regulations, which, by the way, now you can kind of see another potential reason why Treasury is doing this, because if Loper Bright, overturns the Chevron deference, you have to question a lot of the regulations that Treasury comes up with. And you have a situation where you're giving a blank slate to Treasury to say, hey, just define what a trust is, because we don't have time to do it. We don't have time to, we don't even want to vote on it. We're going to trust you guys to come up completely with what a definition of a trust is, which actually would be more of a violation of the non-delegation, violation of non-delegation. But you can see this might be a preventative by the IRS not to get into this battle. They don't want to have this really. And the point is here, the IRS is so vague about what a foreign trust is, and tax professionals often confuse the issue. Absolutely right.
Well, look, let's be practical here, Anthony. So, and everybody, ask you a question. So, you're sitting there and, cross somebody and say, well, I have this, I have that. And the person says, well, this Canadian TFSA, I know that the Income Tax Act of Canada refers to as a trust. I know that word is there. But, I'm smarter than the average tax preparer. So, I know that doesn't have a great deal of bearing on this. We need to look at the U.S. rules. And to be honest, I can't figure out, reading these U.S. regulations, whether this is a trust or not. I just don't know. What do you want to do? Shall we file a 3520? Anyone?
Yeah. Well, we got to be safe. We got to file it, right?
Well, no, what would you do here? Well, Karen, what's your view of this?
Well, if it's not a trust, you don't file it.
Yeah.
You don't know whether it's a trust or not. Well, I probably wouldn't file it.
I mean, I think that's the right way to frame the issue. Okay, because it's not a case. It's not a case of people recognizing foreign trusts and making a decision whether to file 35. That's not what's going on at all. Okay. If it is a foreign trust, they're going to be under a lot of pressure to file this stuff. The real world is, I don't have the vaguest idea what in the world this is according to US law. Okay. I can see it argued either way, maybe, but I don't know. And I'm going to be honest with you. I am just going to tell you that I don't know, and I'm not willing to commit one way or the other on this. You don't
I think if you've got a defensible argument that it's not a trust, then you file on that basis.
I think that's right.
You don't have to be certain when you're filing your taxes. You just have to have a defensible argument for why you're filing the way you're filing.
Exactly. So for Americans abroad, the experience of the U.S. tax system, right? It really is a search for, defensible positions, an island of defensible positions in an ocean of penalties and stuff like that, right?
Yeah. Yeah.
It's a terrible problem.
Exactly.
I don't think the right answer is, I really disagree with there's no harm in filing it. I think there's tremendous harm in filing this stuff. Wait until you expatriate and you look at Form 8854 and they ask you specifically about grantor trusts.
That's what I was actually going to get to. That was actually part of what was something I wanted to cover. Was that okay? So we don't have 3520A, 3520 filing for foreign tax advantage retirement, but where does that come in if you decide to renounce? And are you bound by your previous declaration of what it is? Right? Did you make it?
I don't know that you're bound by it, but I think you've got a serious problem because anybody who knows even the basics about this would know that so you're making a certification, assuming you're going through the rules, filing the 8854. That requires a certification of 5 years of compliance, and certainly, when people approach me and we're renouncing, and there are people using the relief procedure who haven't filed U.S. tax returns, for example. One of the points I make is that this is a project over 6 years, and these returns have to be consistent with each other, right? I mean, you can't have, a pile of 3520s that all of a sudden vanish, in the final return. You can't have a series of 3520s, which include grantor trusts, foreign grantor trusts, and then all of a sudden, on the 8854, on a line that specifically asks you about grantor trusts, you can do it, but you're clearly, I think projecting a certain inconsistency that might generate a conversation.
Well, I would say this is, I'm looking at this regulation now. It's a proposed regulation, but this is the IRS's position. And the IRS's position right now is, hey, don't file 3520A, 3520 on your foreign retirement. So I would say,
yeah, but you got to look, Anthony, at how they define what an exempt foreign retirement plan is. They've got 6 criteria that you have to meet to be able to not file, right? So if you go into the proposed regs, let me see.
Yeah, I got them up here. So what?
Yeah. So it's proposed regulation section 1.60485B2. It's on page 39480 of the Federal Register.
3940. Okay. I don't know if I have the right.
Everybody.
I'm looking for it here. Sorry. I'm sorry. What page you say? Because I can see the page number now. What page?
Yeah, 35480 of the Federal Register.
35480.
Yeah. So this is down in the proposed regs. They start with a preamble that kind of explains everything, And then they have the actual regulations that they're proposing.
Oh, okay. So it's not.
Right.
All right. Yeah, okay.
So this is down in the actual regulations because this is what's actually being proposed. The rest is just explanatory fluff that you can't really rely on, right? You can only rely on the actual regulations.
Yeah, right. Yeah, right. There's exceptions. I don't think we're gonna have. Yeah, we're not gonna have time to go into dig deep into all these.
There's 6 requirements that you have to meet. One, the trust has to be exempt from tax or tax favored.
Is this it? Is this it? Qualified obligation. Oh no, that's not it.
No, that's not it.
No, okay. It's a little. Yeah, it's a real. Right.
Just go through the 6.
Yeah, it's got to be exempt from tax or tax favored. It has to report annually to the relevant jurisdiction. Okay, so for most foreign retirement plans, those are going to be fine, right? Then, generally, only contributions with respect to income earned from the performance of personal services are permitted. So it has to restrict you to only being able to make contributions out of your earned income.
Yeah, pausing, by the way, which I think kicks out Canadian TFSAs and UK ISAs, I think.
Well, it kicks out superannuation as well.
Right.
Right. Or, well, all kinds of superannuation?
Because you are permitted to make extra contributions.
Yes.
You are permitted.
So right. Wait a second. You're right.
You know?
And then this does.
And then they say it's either value or contribution limits. Here's what they've expanded it from that Rev Proc in 2020, right? Where that here's where they say that the aggregate, if the aggregate value is less than 600,000, it'll meet the value limits. But that's only the 4th of 6. And then 5th is that withdrawals are conditioned on reaching retirement age, disability or death, etc., or there's early withdrawal penalties. And then 6 is if it's an employer maintained trust, it has to be non-discriminatory. So look, super can meet all of those except for number 3, which is that it only permits contributions with respect to earned income.
The word only is in there, right? The word only is in there.
Well, it says, okay, let me
read it.
Let me get to the actual.
I think I finally got to it here. Is this the section? Taxpayer foreign retirement non-retire. This section right here.
Requirements is the word only and.
Okay, so it says. Generally, only contributions with respect to income earned from the performance of personal services are permitted.
Okay.
I think you're still in the description part.
Okay, all right, we'll keep going. All right.
Yeah.
Okay. This is really interesting, right? Because to hear Karen go through this, a couple of thoughts come to mind. The first is that the application of this is completely dependent on having somebody like Karen who really understands super, right? And my guess is on the retail level, everybody participates in it, but very few people understand it, right? So I think we're probably in a situation where, regardless of the intention of this thing, it's difficult to know whether it applies, and because of all these conditions, all you need to knock it out is one of them, right? Because these are
that's right.
These are conjunctive conditions.
So when you read like the analysis of it, they're really focusing on part 4, which is the value or contribution limitations, which have been expanded. But for a lot of countries, if their retirement plan allows you to just contribute out of any taxable income with no limit on whether it's from your income or your earned income or not.
Yeah, like a Canadian TFSA, for example.
Yeah.
That's right.
Then it doesn't qualify. But who is the IRS to say you can't just create a retirement plan this way, right?
Right. They're like, well, no, all retire, and that again, this is what really got me thinking about this. hey, the U.S. is free to change its retirement scheme as much as it wants. It's free to do it, but you know what you can't do? No other country can have anything different than the U.S. Otherwise, it doesn't.
So interesting. Looking the other way, Anthony, is it if you move from the U.S. to Australia and you want to say, okay, I'm gonna liquidate my 401k and move it into my superannuation, right? So you could do a direct transfer across if the foreign plan is treated under Australian law as foreign superannuation. US plans aren't. And the reason US plans aren't is because for it to be foreign superannuation, you have to only be able to take withdrawals in retirement. No loans, no hardship withdrawals, nothing like that. Has to all be for retirement. And since the US allows loans and hardship, that's not superannuation as far as Australia is concerned. And you can't transfer it directly across. You have to meet the contribution limits each year to be able to put it into superannuation over here. Whereas if you came from the UK, there would be plans where you could transfer them directly across.
Right.
It's hard to meet these requirements. Somehow, as I listen to you discuss this, and I'm reminded of this this great question that was, or this great thing that President Reagan once said. He said, when Nancy Reagan, when Nancy and I married, we made an agreement that that I would make all the big decisions, and she would make all the small decisions. And after all these years of marriage, we've never had a big decision.
Yeah.
I think that, listening to this, Karen's kind of taking this apart, right, in terms of the Australian thing. I really think that they need to include in these regulations what I'm talking about at this, and we'll call it the FATCA Annex 2 exemption.
Absolutely. Absolutely. And they should also include, which I didn't see, but I haven't looked at it really closely, but they should also include that any plan that is exempt from U.S. tax due to a tax treaty should be exempt from 3528.
Yeah, agreed.
And that's not in the regulations.
All right. Well, make notes of this because, certainly, Karen, we're involved with SEED. I would presume, Karen, that SEED will be making a submission on this.
I presume that we will be putting something together.
Yeah. So, let's make some notes on this because these are all really, really good points. But this has been, Karen, I really thank you for your analysis here because, what you've demonstrated is how unworkable these rules continue to be.
Yeah, right. They propose these regulations that now I'm thinking in my head, well, actually they offer no help. I'm like, what? Because
I'm sure there are countries that have plans.
I'm trying to think of one.
This will fit.
Sorry?
I'm sure there are countries that have plans that will fit under these rules.
Probably, yeah.
Probably there are. But you've got to look every country, and if there's anything like we allow extra contributions that's no basis, not based on your income, but we allow you to top up your retirement savings.
Yeah, these things seem to be, trying to mirror the U.S. idea of how this stuff should work, and that's precisely what it should not be doing.
Right.
Exactly.
What it should be doing.
Americans abroad, anyways.
Yeah, what it should be doing is saying, what is the role of 401ks in the U.S.? What is the role of superannuation in Australia? Are they equivalent roles? If they play equivalent roles, leaving aside how they do it, right? If they're equivalent purposes roles, then they ought to have the same treatment, right?
Yep.
But they can't do that, right? It's just, it's the way the mindset of these people works is that everybody's trying to get away with something. Everybody's trying to get away with something.
And it's not like you go to Australia and get superannuation so you can avoid U.S. tax.
If
you start working in Australia, you have no choice.
Well, that's exactly right. But very few people think about tax anyway. Okay, this is seems to be the pastime only, mainly of people in America, right? But what this demonstrates again is how, what's the Greek myth of, where you're pushing the rock up the hill and every time you get close, it falls down. This just cannot be accomplished without getting rid of citizenship taxation.
Yeah.
Mhm.
And
Right.
I think that's the main message here.
All their regulations to clarify actually don't. Their regulations to clarify only add more complexity. I mean, that's what
I
that's
don't understand the stuff. I mean, I have trouble reading it. I mean, every time I read this, I have to start and put it down and pick up somewhere else. And I mean, it's such a process to read this.
yeah, and you're a pretty smart guy, John. And Karen,
Well,
you're pretty
more
smart as well
experience
there. And I
reading this
mean,
stuff than most people. What is clear is on the retail level, there's no possibility that any normal person could comprehend this, and very few tax preparers are going to invest the time to
here
learn.
we go. Here's from Melvin, by the way. Yep, German Social Security allows for own contributions. So, no. You must be your Social Security must be a foreign trust, right? Because you're looking.
Well, okay. Remember though, the fact that that's called Social Security, it's not binding, right? But
Right.
if Germany's position is that is Social Security, that may be a situation where the treaty trumps all, right?
Yeah.
Maybe. But that's another overlay, and we're talking about today, not treaties.
Not treaties, just right.
How does this work? How is this intended to work from a U.S. perspective? And look, sort of in closing here, I think that we ought to give a shout out to Treasury, for really trying to deal with this, which I think they are, and I think they deserve a shout out for that.
Well, I would say their preamble to this was pretty good. Like, hey, look, we have all these other reporting requirements that came up since then.
Mhm.
So, I mean, right. I would say that they deserve accolades for that recognition of the truth.
Yeah, I just think that they've undertaken an impossible task, to try to define that.
Yeah.
That's all. And I think that these are the points. This is why I would like to organize a coalition of people who support the basic principles that we've talked about today, and use this as an opportunity to really try to engage with these people and get them to understand the problem. I mean, they're in the process of trying to, improve these rules, and you don't get these opportunities very often. And by the way, also to their credit, remember that the RevProc 2017 was a direct response, okay, to all those improper penalties going out. So it's not that they're evil or anything. It's that they themselves, right, are charged with a completely impossible task, right? A completely impossible task. And I think that, they should not be criticized. I think this should be an opportunity to engage and say, look, great try, but this just can't be accomplished the way you're trying to do it,
Yeah.
Let's look at this from another point of view. Does that make sense?
Beautifully said. John, and you know what, John, and I'm reminded of one of your quotes. The greatest victim of the IRS is the IRS.
Or the greatest victim of citizenship taxation is the IRS. Yeah, this is, I think, proof positive.
This is proof positive of it, because they're trying to fix it, and you're in a situation where you might be making, in your attempt to fix it, you've only confused it even more, and you're giving it a phony. Hey, look, you don't need to file this on your Australian Superannuation. Well, it doesn't apply because you can make more contributions. How many people are going to pick up on that nuance? And so
nobody. It would be impossible
Right.
for people to put together something that would achieve what I think they're actually trying to achieve here. And again, how do you achieve it? You achieve it through the Annex 2 description, or as Karen points out, the tax treaty description, or
Both. They should do both.
yeah, both. Okay, okay, what is the role that this plays in Australian society? Is it the same thing as the 401k? Yes, therefore, this type of reasoning, rather than trying, this impossible, let's put together the factual conditions to make this work. What, are you kidding me?
Yeah,
I mean,
well, here's a great comment, and I think maybe this could be a call to action for, because we all, we did an episode on our FBAR regulation comments, but here's one from Melvin. Many foreign pensions allow for voluntary contributions for various reasons. The idea of the regulation is good, but the earned income restriction needs to go. And that might be, hey, look, we got to get rid of that because this is really not going to apply to too many. You're basically creating a regulation that doesn't actually apply probably to the things you're trying
the real world, right? Because remember that what's happening here, right? In a way, this is extremely schizophrenic, right? In the sense that, when they think about pensions, you get the impression more of a 1960s, you work for Ford Motor Company or something, this sort of stuff, right?
Yeah.
The point is that these types of pensions they're an extreme minority now. I actually know very few people in my life who have those kinds of pensions. And
the defined benefit is pretty much gone. It's all defined contribution now.
Yeah, if you even get that, right, which is a forced saving plan. But but to keep this stuff tied to the employment relationship is a big, big mistake, because what's happening culturally is that people are now required to, take responsibility for their financial futures, and you can see this in the growth of the financial planning industry, right?
Mm-hmm.
And it would seem to me that these proposed regulations need to reflect that cultural reality, okay, and not, as I perceive, not exclusively, but they seem to be more, by tying them to employment, based on sort of a 1960s idea of, how people save for retirement or something. I don't know if that's true, but it seems logical.
Seems, yeah. Well, all right, we are about up for time, and I just want to, show. Here's Karen's page, fixthetreaty.org. You go here for information, for the real information. Karen has just done such a great job, and she continues to do so with her outreach and trying to be really a big part of the solution. So thank you so much for joining us today, Karen. Always a pleasure. Always great to have your brain power helping us out today.
And all your work over the years, Karen. For those who don't know, Karen's not a frequent sort of participant on this thing, but I think it's important to understand that Karen has been a very active, helpful contributor, and has achieved lots and lots for many years. So to have Karen with us today is to have one of the real heavyweights in the world of trying to change citizenship taxation. So thank you, Karen.
Yeah,
thanks, John.
Thank you so much. Yeah.
And appreciate that, even though I think it's undeserved to some extent.
You
here, but
I know it's deserved.
Keith did have to drop off, but I do want to give a shout out. And by the way, if you're wondering about these issues, you can join the Facebook group, AmericanExpatriates.com for him. And if you are thinking of renouncing because this stuff is just getting a little too fun for you, maybe it's getting a little too fun for you, you can reach out to John Richardson, the great John Richardson, at Citizenship Solutions at protonmail.com. And if you are looking to clean up your issue and you're looking for some independent thinking, I would say, hey, you can book a call with us here at irsfedec.com offshore. We do a lot of offshore disclosures. And I would say this is that we will actually apply independent thinking, and that we will give you options about how things can be treated and inform you of all the alternatives and leave it up to you how you want it to be done. So you just go to irsfedec.com offshore. This is Anthony Parent of IRS. I want to thank Keith Redmond, John Richardson, and Karen Alpert for another amazing podcast where we're really able to get deep into these issues, so helping you understand these things in a way that no one else really can. So thanks for watching. Be sure to turn on, subscribe, and turn on those notifications so that you don't miss any opportunity when we go live. We always love seeing so many comments that we have today. Thanks again for watching.